So we're in this situation, Gene, and you've written about this a lot, right, where we almost just look past the quarterly delivery data if you hold the bullish thesis that long-term it's a world where Tesla operates a proprietary robo-taxi ride-hailing service. Take that and interpret the data of this morning, please.
So I think Craig really summed it up well about this shift in investor psychology, and it impacts how we think about the delivery numbers today. So if we rewind 4 years ago, the expectation was by 2030, Tesla would be producing about 10 million vehicles per year. They're going to do about 1.7 million this year. And those expectations now are that they're probably going to do somewhere between 2 or 3 million. And I think that the consensus numbers today at the core of what's important is that if they can just stick around like 2 million deliveries a year, that would be about 10x more deliveries than what Waymo is going to be putting on the road for their autonomy. And so this is not all those, of course, 2 million will go into a robotaxi fleet, but all of those will have opportunities for Tesla to sell this very high margin, full self-driving software, whether it's through a $100 subscription a month or through $8,000 upfront. And so, Ed, I think that the context around delivery, of course, is in relation to what's going on in autonomy. That is the bigger story. You've done a great job of framing that in today. I do just want to make a couple points that are important because investors do still care about deliveries. A couple important points.
Yeah.
First is, as Craig talked about, we're at the bottom here, down 14% deliveries. It's going to be down 10, probably flattish in the December quarter. Something else is that the sunsetting of these tax credits is going to boost the deliveries. I think that they could surprise to the upside. Based on my sensitivity, they probably can be up 3% in December, the street kind of at flattish. And but any of that good news of this pull forward because of the sunsetting of the U.S. tax credit will probably be dismissed by investors. And when you put all this together, there's just a lot of noise around the delivery number. And what's most important is what happens in the weeks ahead in terms of Austin and going to another city. Like, that is really what this the investment case around Tesla has boiled down to.
But Gene, the cash cow, the money that's funded all of the focus on AI and what progresses robotaxi and autonomous, has been the ability to sell cars. Is 2 million therefore enough from your perspective going forward to finance this? And could it not be eroded yet further if there's more withering of brand Elon?
So right now they have 37 billion in cash and equivalents. And if they do 1.6 to 1.7 million cars, they're probably going to burn and continue to invest in autonomy, invest in new production of a lower, more affordable vehicle. They're probably going to end the year somewhere between 33 and 35 billion. This kind of ending, when I say ending the year, I mean ending the next 4 quarters, over the next 4 quarters. So you're going to see this decline. So Caroline, to answer your question is that they've got a ton of cash, and they can weather essentially these lower unit numbers. And so I think at the core, this is a very different story. Elon on the last call talked about the number of near-death experiences the company has, and that 2025 is going to be a most difficult year, and we're seeing that in these down 14% numbers today. But he also mentioned that we don't have this near-death experience, and I think that just simply puts back to the cash. And another perspective around that cash and the tight spot, if you will, that Tesla is in right now, is that if you take a step back and say that the world is going to be autonomous, whether it's robotics in factories or moving people around in vehicles, if you do take that approach, then these other competitors need to be making investments. And I think that is one of the reasons why Tesla continues to have the support of investors, is these investors look around to what else is out there, and really no one is doing anything besides Waymo and some of the things that are going on with BYD in China. And so the setup, even with a cash burn over the next 4 quarters, is still very favorable in terms of how this story ultimately plays out for Tesla.
Gene, I was spending a lot of time poring over the China data overnight, the Chinese Passenger Car Association data. They don't distinguish between domestic sales and export, but there was a return to growth there while the market broadly across NEV grew. What did you get from that?
Kind of a similar takeaway that Craig had is that any news is good news. And kind of keep in mind, too, is that China, it is fiercely competitive. BYD has made huge leaps forwards. And the way we kind of play that forward is that a comparable Tesla in China costs about 20 to 30% more than a comparable BYD. And that's a similar kind of a split as BYD starts to roll more into Europe. And so when we look at these numbers, and my sense is that anything around flattish, it feels like I'm cutting the company too much slack here. But the reality is that if they can maintain kind of this flattish, I think that's a positive.
Is it an overwhelming negative, though, the arguments going on, the feud that re-erupted between Trump and Musk? How much is that an issue for you, Gene?
Well, at the end of the day, what was missing from Trump's comments was, of course, he came after the tax credits. He came after what was going on with government spending and SpaceX. But what was notably missing was any commentary that he was going to slow down the adoption of autonomy. And I mean, that, of course, this is what we're talking about. This is the most important piece. That's the one lever. That's the critical lever for a Tesla investor. Very different for SpaceX, but for a Tesla investor that they have to look at is how is this pace of autonomy going to move? And I think one of the reasons why the White House did not, why President Trump didn't mention that, is that the concept of physical AI, specifically around robo-taxis, autonomous vehicles, is going to be a signature example of AI in the real world. That as governments start to be more competitive around AI, just imagine a world where we have robo-taxis going wild from BYD and Baidu in China. They're also in Europe, and they're not available in the US. I think that would be a bad look for the White House. And so when I think about this feud, I'm entertained by it. I think cooler heads will prevail. But most importantly, I think that what is going on around AI and physical AI and autonomy is so much bigger than any sort of high school feud between Elon and Trump.